All right, hey everybody. Hope everybody had an amazing day. Normally, I would say I hope everyone have a profitable day, but I think I'm going to switch it up to saying I hope everybody learned something today. But it was a great day. So let's jump into it. Lots of different learning for me personally today. So for that, I am very grateful. Um, So, oh shoot, how am I? We gonna do this format? Well, let's go through. Let's just go through current positions. What I did. We'll start with what I did and go into current positions. So XBI, you guys know from last night. I said I'll get out of here at 95 for a loss. And that's exactly what I did. Right at 95, I got out of those debit spreads. Out at 275, which is a 40% loss. And this is why position sizing is so important. Where, so I start a position with about a third of what I'm usually willing to do, and so as a result, this was the smallest position in the portfolio. So a loss like that is whatever. It didn't, I guess it's not whatever, but last night or yesterday. Let's see how CCJ is. But, oh, wow. Look at that. Jeez. Oh, shoot. But anyways, yeah. So this one, was a 50% gain, 10% position. Dang, this still looks so good. That is awesome. So this one, okay, so how did this turn into such a big position? Because this kept working, it kept working. So I forced money into winners. Whereas XBI did not work. So I didn't add any money into it. Now, down here on this day, I really wanted to add to this position to lower the cost basis to take less of a loss. But the reason I didn't was because that would be breaking lots of rules. One of those being not adding to losers. Another one being not buying below the 200-day moving average. Now, I had a high probability that would have helped that position out. But it's a slippery slope, and you let up on one rule and two rules and three rules, and soon enough you have no rules. So it's more of a principle of it. So let's see kind of everything. So go through some of the things that we can learn. Now, couple things that were really good that I did. This whole area looked so good, but I said, now is not the time. Now is not the time up here. And everyone was talking about it up here. I said, now is not the time. Why is that not the time, even though it looks really good? Because the RSI is up here around 70 and the slow stochastic was up here. So kind of at sort of extremes, right? Not a good risk to reward. So that was good. I waited until this day. So that was good waiting until this day. The thing to learn from this is this pullback was on very heavy volume. and I should have been paying attention and more prudent that same day, and then just cut it that same day with that violent break below the 50-day moving average. I should have just cut that the same day. So that is, what you learn from it. Now, some people, most people, I would say 99% of traders would say, dang, I wish I didn't take that trade. And that is a loser's mindset, because this met all of my criteria. I waited and waited, bought at a great place. Again, like I said, I wasn't quite paying attention as much as I should have been that day, and just cut it that day with this violent break below the 50-day moving average. But this move, such a violent move down in an ETF, is quite an anomaly. So to take such a low probability loss like this, the chances of it happening are very low. So again, position sizing, that's why that's important. And it's the cost of doing business, you don't win them all. So, right, trading's not guaranteed. So, that's what happened. Great learning opportunity there. And now let's go over another learning opportunity. So Dow Jones. So again, this acted as I expected. Again, I hesitate using that word expected, because all that I expect to happen is that something will happen, right? Whether it goes up or down, you don't know, you don't need to know. I don't expect anything to happen. My strategy calls for buying. So that's what I do. Wow, huge volume. Okay, so another learning opportunity here. So Dow Jones, you guys remember, was it yesterday? Yeah, yesterday I said on a pull, wow, Dow Jones is still looking really, really good. So on a pullback, I will get into Dow, and that's what I did on this day. Yesterday, right here, and a pullback, right here. Now, I added to this position today, and let's see the mistake that happened. So this is on a 5-minute chart. This is first thing in the morning. This whole setup here looks great. Hourly chart right here. This was right here. This looks great. Kind of breaking out, coming back down. Very good low risk entry point. I was at my computer at this time and thought to myself, wow, this looks really good. I didn't end up adding to this position until like right here, right in here. I missed this buy point because I had other things going on, so I was distracted first thing in the morning. And sure, that's a legitimate excuse. It wasn't like I was distracted twiddling my thumbs. But what could I have done differently is got up earlier. Because if I got up earlier, the things that I needed to handle first thing would have been handled. So that's on me. I take full responsibility for that. And I missed this entry point. Oh man, it would have been so good. But just because I missed the entry point, the optimum entry point, doesn't mean I'm not going to go after it again, because we're not on anywhere like extreme levels. I do not believe that wasn't the last push. Now clearly this is up into some sort of resistance area. We'll see what happens tomorrow. we'll see what happens tomorrow. It could totally pull back, right? I mean, anything can happen, anything. But this still looks good, and if it continues higher, it has room to run. This isn't just like a 1 day thing that I'm looking for, right? This will have some room to run. So the positive on this is I still added to that position. So let's go over these positions here in Dow. Now, why did I choose to add to Dow and to not Russell or not NASDAQ position? NASDAQ position, the NASDAQ is the weakest of the indexes right now, and we'll go over that in a little bit. So again, same theme. I don't add to the weakest index. Obviously, that could change tomorrow. Obviously, you don't know what the future holds. All you know is right now. Well, actually, I mean, we've been talking about this. I said, the market has picked the winners going into this next, administration. And those winners being financial services, reshoring, and small caps. So we already know what the theme is, what the market is moved money to. We know financial services is unbelievably hot right now. So I chose to add into Dow Jones for all those reasons, as well as I already have as much exposure as I want to NASDAQ. I could definitely add more, but I have as much as I want. And I also have basically as much as I want in Russell 2000. I've already been buying and adding for a couple days. So Russell, Dow, I needed to catch up in my exposure with Dow. So let's go over Dow Jones. Those are debit spreads. I got 2 different types of debit spreads. It's funny because I write these down every day and go over these every day, write them down. And, I got to use a calculator and stuff. And I almost thought, man, I'm going to have to add a whole nother debit spread, to go over. Like my original debit spread I placed. There's no way I can get into that one now, the risk to reward, adding to that exact debit spread is just dumb. I guess that's another downside with debit spreads. But anyway, so December 20th, 440. Oh no. That was my new one. Okay, this is the one that I've been holding. December 27th is the expiration. 433 is the long call. 444 is the short call. Those are 478 currently. Those are now 632. So again, I couldn't be buying those same debit spreads because the risk to reward is all off, right? So I found 440s. It's funny because so I watch futures. I watch the futures chart. I'm not looking at Dow Jones. I'm looking at the futures chart. So sometimes I don't know what the number. So I'm looking at the futures chart and then trying to place it. So anyways, so December 20th, 440 is the short call, 450 is the long call, and I'm looking around at the 430s, and I'm thinking, my goodness, I can't be placing any debit spreads right now. There's nothing I can get that's worth it. And then I look, at the DIA, ETF, and think, oh my goodness, it's almost right here, right at 440. This thing is more around 430. So anyways, 440 is the long call, 450 is the short call. Got those for 406. Those are currently right about 420. So let's go over while we do this, while I go through these positions, let's also kind of look at, the holdings in some of these. So look, United Health, largest holding, down. For the day, Dow Jones is rocking. So that's a good sign. Look at this. I mean, Goldman Sachs, right back up to right after the election. The strength in financial services is just shocking. I don't know if it's shocking, but yeah, it's clearly extremely strong. Okay, so there's that. Let's look at Caterpillar and Train. Yeah, see Caterpillar up 2%. This looks good. I got it back above the moving averages as those are converging and moving out. This has definitely been basing for a long time. Wow, this looks fantastic. Gap was filled. Maybe it caught some people with stop losses below the gap, below 380. Yeah. Ooh, that looks good. Oh, that looks fantastic. Wow. That's so cool to see. You love to see a company like Caterpillar kicking butt. We love it. Love it. If nothing else, how many people does this company employ? How much of these people's 401ks is tied up in this stock, right? The retirement depends on the stock. They've got families, these are hardworking people. So, and as a former tradesman, I love seeing a company like Caterpillar just freaking rocking. Same thing with Train. Look at this. Oh, that's so cool. And it's kind of basing again. Getting ready for another move higher. So freaking cool. Right? I mean, how many factory workers for Train, grinding away. And next thing they know, they've looked at their 401ks a year later and they've doubled. Like, dude, that's so killer. That is so cool. You love to see that. Oh, man, love seeing that. All right. So moving on, Russell 2000. So we'll go to IWM. Look at this, rocking. Such a strong day. Again, clearly we've got some resistance area. Who the heck knows what is going to happen, right? And it doesn't matter. People always are asking, what do I think can happen? And the answer is no freaking clue. I don't play the game of predictions. I don't predict anything, I trade. I heard somebody say that quote. I didn't make that up. That's such a good quote. I'm not here to predict. I trade my strategy, knowing that anything can and does happen. So what could tomorrow bring? Don't know. What we know for sure is beautiful breakout from a nice base, big gap, lots of money coming into this index, nice pullback, gap was filled for the most part, and rocking higher, right? So again, so I started a position here on this day. Maybe it was this day, I can't quite remember. But then I added on this day. And maybe a third day, I can't quite remember, but again, 2 days, something like that. I think it was Friday and Monday. What is today? Thursday. Yeah, it's probably Friday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday. Yeah, that's how it went. Friday, Monday, Tuesday, Wednesday, Thursday. So, anyways, IWM, December 20th, it's expiration 229 on the long call, 239 on the short call. Those are 412 currently, now 552. So I have a good position size in these. Depending on what transpires, I will add to this. Same with Dow. Why? I believe this has more room to run, and buying here is not stupid, like up here and up here. That's why I never bought into Russell up here. Okay. All right. Let's move on. We'll go over... Well, so Goldman Sachs, I also have, since we were talking about financial services, I still have a position in this. I've been holding this since back here at 459. Again, this is going to be a fantastic, this is already a fantastic trade. This will continue, I believe this will continue to be a fantastic trade in the future. Now, you think, wow, that looks really stretched. It's not. And gosh, see this bit. So this is a 2021 to 2024. So, right around 3 years or whatever ish of a base. So that's huge. And I mean, look at this base. Beautiful, super beautiful, textbook, picture perfect, clean, easy, orderly. Easy to see this. Huge sort of saucer base. Nothing sporadic, nothing crazy. It's easy to look at. It makes sense clearly now, uptrending. Not to mention all the different fundamentals behind this, but that's it for a technical analysis. But yeah, I mean, look at this. It's forming another box. Yeah. Another box. Sweet. This might be something I would go after at all-time highs. Maybe some options trades in it, I don't know. I usually am an index. I trade options and indexes. So, if I think Goldman Sachs looks great and JP Morgan looks great and Berkshire Hathaway looks great and Visa and MasterCard, I'm going to be usually in, XLF. So, anyways, yeah, this is just an equity position in this, but nonetheless, very large position of the portfolio. Very, very large. I haven't taken any of it off. There's no reason to. Okay, let's go over, now we can go over to NASDAQ, we can go over to the laggards. Wow, that's wild to say, huh? The laggards. The Qs. Yeah, good day, I don't know. I have this little line drawn here. I get the feeling this is dumb. But who knows? Maybe it's something. I know some actual, real, studied technical analysis technicians that are next level that would think this is the dumbest thing they've seen. But we'll see if it plays out. Again, sometimes I draw lines so my eyes can understand what I'm looking at, what's going on with the chart. As opposed to some sort of pattern or hard and fast rule. Sometimes I do it just for my own benefit, my own benefit. Okay, so anyways, all right, long introduction there. So December 20th, 5:15 on the long call, 5:25 on the short call. Those are 364. That's average cost. Those are currently 324. Also, the leveraged fund, December 13 is the expiration. $80 on the long call, $90 on the short call. Those are those were 440s when I paid. Those are currently 270, and I actually might add to these, to be honest. I was a little bit shocked that these are only 270, so I may add to these. I may, to bring the cost basis down, and it's acting fine. You know, I mean, yes, it's the weakest of them all, but no sell signals have been hit. And I was very surprised to find out when I wrote these prices down today that it closed at, 270. I mean, wowzers. The risk to reward there is sweet. So, okay, now let's flip directly into some individual stocks in here. NVIDIA, as you guys know, this is my second largest holding. It's upwards of 25% of the entire portfolio. I don't know if I was surprised by this day. I thought their earnings was great. The reaction after hours was not good. The swings in this was pretty wild for the world's largest company. I mean, we're talking 300 plus billion in market cap in swings, in 20, 30 minutes. I don't know what to make of this exactly. We'll keep on keeping on. Stock's uptrending. It is the market leader. So no sell rules are broken. My thesis on them remains the exact same. Anyway, so average cost of those shares, $129. And by the way, I have a full position size in this. I could certainly add more. I'm just satisfied with the position size in this. It's good, 25% ish or so. There's a good, healthy, strong position size. And, so how did it get so large? Because I forced money into winners, and this is acting good, and it is the true market leader. Lots of areas in here to add. Lots and lots and lots. If we look from here, so, this is just from, the summer. So really, look at this. This has been a consolidation and continues to be for a long, long time. The 50-day moving average is really just starting moving up. This can support another leg very high if that materializes. So 129 is 126.97 is the average cost basis. It's right there, 150, 146, whatever. What I don't like is that it gets to all-time highs and sells off, And that's what I don't like to see. But, okay. Let's see. But again, so like one negative thing, I don't base my decisions off of that. I'm also kind of thinking out loud here. I don't have any of this stuff pre-planned going into the day. I do have some of it going into these videos, some that I'm pre-planned. But so before going into the individual stocks in here, let's go over Bitcoin. So this is my largest position as Bitcoin in my brokerage account. And clearly it's stalling out right here around 100,000. It should be a surprise to nobody. We'll see what happens. Whatever. We'll see what happens. Now this is I had the realization today, all right, I got to start getting prepared to sell this. I think what I will do here is on a next push higher, I will be getting out. And this is like really funky, this action here. It reminds me a lot of back here. You know, it's kind of, this reminds me a lot of this. So, yeah, a push higher, I'll get out. It looks like it is stretched here, and it is, don't get me wrong, but it is Bitcoin. But if I believe this area looks similar to back here, I want to go through how the rest of the indicators looked back here. And the rest of the indicators looked even more stretched back here. So the RSI was even higher. The stochastic stayed above 80 for even longer. And then on the weekly chart, you know, same thing. So right here, RSI was even higher, up into the 80s on the weekly chart. You know, monthly chart, you know, whatever. Gosh, yeah, this is insane. This so many months basically, just like I said, you know, if this breaks out, right? Remember, I've been in this position for a long time, and I kept saying if this breaks out, this has plenty of room to run. Now, in terms of being in this position for a long time, we're referring to BitX. Actual Bitcoin is something completely different. And we're talking about a brokerage account, right? So obviously it's different. But so BitX, $33 is the average cost basis on this, 33. It's, you know, 64 or whatever, 63. And this is the largest position in my portfolio, so that's cool. All right, now let's go over, oh crap, we have one more position to go over. Oil, I mean, hello, what the heck? Going from looking so good yesterday, my short position yesterday, looking so good, to now it looks not good at all. This was a strong day for oil. I was looking at this. You know, so really strong move up, right? And it's coming down, and I thought, okay, cool, that was the fake out. The, you know, bull's getting trapped up here. But and then right in here, I thought, oh man, this thing has definitely got some strength to it. So like I said, we'll see what happens for a day or two. Continued buying, I will get out of this. But I will remain long-term bearish. So we'll be looking for more shorts. Anyways, USO January 17 is the expiration, $74 strike price for the puts. 430, those are 377. Okay, so those are all the positions I'm holding are in or closed out. We still need to go over some futures trades. I'm trying not to make this too long. This video too long. Let's go over individual tech stocks. So some mega tech. So Amazon. You know, this still looks good. This is fine. I'm a little bit surprised it didn't hold this 200 level more easily. But this is still, you know, okay. It's fine, whatever. Microsoft looking weak. This looks weak. This is weak. None of this is strength. Like I say every time, obviously this can turn around and go back up, obviously. But just less probability, that's all. Like I say all the time, trading and life is just about probabilities. That's it. So I just look at probabilities. All right, Microsoft, Apple. Yeah, see, it can't really build momentum, whatever, stalling out, blah, 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 whatever. It's nothing to even talk about. Meta, kind of similar story, kind of down on the day, right? So you're going to see a recurring theme here. They're all down on the day. Now let's go over to the shocker, Google, down 4.5%. This was just yesterday. I said this looked good. This is why you know that anything can and does happen. This is down big because, they got to sell their Google Chrome business and can't be in the browsing business for 5 years. So big reaction. Down to found support right here at the 200-day moving average. That's good to see if you're bullish on Google. 50-day moving average is still moving up, right? So the kind of line in the sand here has been supported. But let's talk about the bigger picture here. So one, I'm not a fan of single stocks. Not really, although Goldman Sachs and Nvidia and, but just generally speaking, the reason people pick single stocks is to outperform the index. That's why. Or there's other reasons, like people like to feel smart of discovering a company, and that's cool and all, but I'm not in this to feel smart or to flex on anyone or get my ego inflated for picking a good stock. That's not why I trade. I do this as a business, a game of probabilities. So you take on single stock risk in the hopes of beating indexes. Now the way to eliminate single stock risk is indexes. But then you think, well, but you can never outperform the index. The way to outperform the index is with options. So that's what I do, as well as some single stocks. Okay, yes, some single stocks. I mean, this isn't 100% rule, but just generally speaking, this is generally speaking. So now let's look at all of this. So Nvidia was down, Google down, Microsoft, Apple, Amazon, Meta, all kind of down. How did Tesla do? Yeah, down. Okay, and the Qs were sort of up. So on those call options, I'm up on the day for NASDAQ, as well as all the other indexes as well. But now, okay, so let's look at the bigger picture instead of just a strategy and P&L. The bigger picture is the index still performed okay with the largest holdings, the biggest, baddest companies underperforming. That is a bullish sign. Now, I would have liked to see much more strength with tech stocks because this gap was filled and it stalled out. But this is whatever. We're not at stretched levels here. This is not an extended level. This is not an extended level. So whatever. Okay, let's go over futures, and then I gotta get out of here. I really wanted to do kind of some trading psychology in this one as well, but this has turned into a longer video than I expected. I have some things written down. Yeah, so again, so like Nvidia was down. I mean, they didn't end down, but Google down huge. These other companies, mega tech companies, kind of stalling out, and we're seeing rotation. We're seeing indexes up. The financial services, Caterpillar, Train, Russell 2000, Dow Jones, rocking. That's good to see. We like to see this rotation. We have, again, just like after Trump was elected, you could tell immediately where everybody was putting money to, and that was financial services and small caps and some manufacturing and American reshoring and stuff. So that trade is continued. So that is a theme to keep looking for. Okay, let's go over futures. Great day trading futures. Now, all my trades in futures were in micros for NASDAQ. And why would I trade this when this was the weakest of the indexes? Because the risk to reward on the trades that I wanted to place made sense. So, and yeah, the risk to reward. Yes, that's why. Because the risk to reward on these trades made sense, is where the other ones didn't. I would have had to be risking more than I was willing to. Okay, so 6:40 in the morning, right here. Yep, 640 right there. 2670. So, okay, let's zoom in here. 2670. By the time I saw this and reacted, I was already way late. I would have wanted to get in here. I saw it and thought, holy moly, I am late. But I got it. Okay, sold 2710 27 right here. That's sweet. That is a 40-point move. That's a big move. Obviously, I missed all of this right here. You'll see a common theme with this as I continue to hone my craft with futures. But the common theme is there's sometimes I miss more of the move. But 40-point move is a massive move. That's sweet. That equates to $81 per contract. And again, I may stop talking about like the dollar amount and just go to the points, but whatever. It just doesn't matter. Okay, so then at 7-Eleven, right here, again, this is perfect supporting action like this, you just kind of chill and let the market come to you. I'm not trying to force anything, with trading futures, it's kind of more when it's obvious, because anything can and will happen, right? So, and when you're wrong, with futures, it sucks. It's a highly leveraged position, and it's a lot. And so that's also another reason why, while I'm honing my craft here, I trade micros. I will trade the, minis and NASDAQ sometimes, or ES more, or, the Dow and Russell. But so anyway, so here, boom, perfect. Entry point, like right here. Yep, 2606. Got out 2635. $58 a contract. So somewhere in here. Oh, 635. Oh, way down here. All right, not as close as I originally thought. All right, but nonetheless, good trade. 754. guess, up here. Not the best entry point, but nonetheless over a clear and obvious level where as long as this held, the probability of it continuing higher was great. So 206435 to 20675. You know, again, 30-point move. These are sweet. All right. Was that it for futures? No, it's not. 1047. Oh, that's when I took a short in NASDAQ. 1047. Okay, so right here. 2854. I got out at 2840 for a small gain. Why did I get out here and why am I talking about this one? Because I think it's worth noting that during this same time, Dow had pulled back right here and looked good and started moving back up. Same with Russell. Somewhere around here, whenever, I don't know. It was moving kind of back up. So I got out in anticipation of it going higher, in which it did, but then continued to sell off. And I got short here again and caught some of this move. Now, I'm not looking to, on a bullish day, I'm really not looking to hold to place any shorts. But with this huge move down here, right back here into resistance, I figured it would make sense to try. So yeah, caught some of this move again, right? So in conjunction with these two is pretty good. And that's it. Yeah, that was it. Now, why didn't I try later in the afternoon for any other moves? Because you had uncharacteristic moves for the day, out of character. Like, this kind of started, that's why. So, like, see, right here, boom. I was like, all right, after this move, I thought I'm done with futures for the day. Unless it would have been something obvious and something overreaction or down here or whatever. But it wasn't anything super obvious like that. It just continued to kind of chill. And I didn't place any other trades. Okay, so... Oh, geez. Okay, I really, really want to discuss this really quick. Yeah, really quick, and then I gotta go. I said I was gonna do some trading psychology in this, and I think it's important to discuss. Trading brings up emotions in people, and it's important to remember those emotions that are brought up are all self-inflicted. I don't know if that's the right word, but are caused by me or you, whatever. Caused by the individual. They are not caused by the movements. So none of this information that we're looking at here on the screen is anything other than price, pictures, numbers on a screen. That's it. The way that we interpret it is the way that we interpret it. None of this is so what I'm getting at is it is not threatening. None of this is threatening behavior. None of this is fearful. It's just numbers on a screen. Any sort of negative emotion is because of me. Any positive emotion is because of me. So as much as I try and keep my negative emotions in check, I also do with my positive emotions. But a lot of times traders have a hard time pulling the trigger. There's this thing, analysis paralysis. And the easiest way to get over that is, does this meet your criteria? Yes, go for it. Anything of, oh, you worry about this or whatever, that is all self-inflicted, and that comes from a place of weakness. And that is not something that is tolerable. That is not what a winner does. That is not what the greatest traders in the world do. That's not what I do as a top 1% trader that is on my way to becoming better and better every day. That is something that is simply not acceptable. So that's all I wanted to say about that. And what's tomorrow going to hold? Don't know. Maybe it's going to be a chill day. Maybe you could just rip everyone's face off. I don't know. I think, kind of a lot of it, I think kind of right now, I think kind of hinges on tech because they're really like quite lagging, and these are huge companies, right? So we'll see what happens. We'll see. Let's see what semis look like right now. Yeah, so that's it. That's all. I hope you guys enjoyed the bonus trading psychology segment, and we'll see you tomorrow.